Hello everyone, this is Jordan. This video is being recorded on the evening of Wednesday, September 11th, 2024. Thank you so much for tuning in. And yes, before I get to the video, it is September 11th, so I do want to send prayers to everyone that was impacted by the terrorist attack some 20 plus years ago. And I also want to recognize all the people in New York City and elsewhere who did heroic things that day. And, heroic things in the wake and in the aftermath of September 11th. So I think it's important to recognize those people who were heroes and those who served and, those who were victims of the attacks. So I just want to say that. And forgive me because I don't have a good transition. Now we're going to get into junior mining. And in this video, it's going to be a little different. I'm going to talk about why junior mining M&A is really starting to heat up right now. We have 3 big deals in just the last month. So going to go over that and look at a few deals and maybe tease something I'm working on for this weekend. So let's get right to the video. Okay, so let's look at the recent M&A in the junior mining sector. So we had First Majestic Silver buying Gatos Silver for $970 million. I mean, almost $1 billion in the U.S., but, with the way the dollar's depreciating, what's another 30 million? So basically call it 1 billion, we can round up. And then after that, we had, or maybe this was before, I can't recall, Goldfields bought Osisko Mining for 1.6 billion. Now, they may have overpaid because they were paying for 50% of the Windfall project, because Goldfields already owned 50%. So they were buying the other 50% for 1.6 billion. So when you round that up, you have to take out the cash first. There's quite a bit of cash. But still, that was over $2.5 billion when you account for the fact that they're only buying the other half of it. So really significant. And then most recently, Anglo Gold Ashanti bought Centamin for $2.5 billion. So these were the 3 big deals in just the last month. So it begs the question, why are we starting to see these deals? Why are things heating up? And I think there's 3 reasons. So first of all, number 1 and 3 are kind of related. But number 1, you have higher share prices. So when the majors see higher share prices or just the larger companies, they can use those share prices as currency to acquire smaller companies. Because most deals, or really nearly all the deals, they're not done 100% in cash. So they're done in stock. So master of the obvious here, but when bigger companies have stronger stock prices, it makes it cheaper for them to acquire. So that means more M&A. Now, secondly, there is a real dearth of high-quality assets out there in mining, and junior mining specifically. Now everybody's definition of quality is different, but if we're looking at high-quality assets, there's not like 10 or 20 or 30, at least ones that are really ready to be taken over. You could probably, this is not my area of expertise, but I would say there's less than 10. Maybe there's only 3 or 5. It really depends how you look at it. But just in general, we know that most mining projects that have a resource are going into development, not most, but even when you get to that point, not all of them are going to work out, or not all of them are in the lowest cost quartile. So that's number 2. So the third, I think, you have higher metals prices. Then also there's a risk of acceleration in metals prices. If you're looking at what's happening right now, you have gold trading around 2,500. We know there's a measured upside target of 3,000 and a log target of 4,000. I think you need to see, a bear market in the U.S., some real weakness in the economy to get to that point. But we know that there's a good chance of a recession coming up in the next 6 months or so. You think about that. You think about the rate cuts that are going to have to happen. A new president, whoever wins, they're going to want to start spending money probably early next year. So you think about all these factors. We'll finish on the third one. So there is a growing risk that you could see an acceleration in metals prices. So you have a higher share price. There's not that many high-quality assets out there. And then you think about, could there be an acceleration in the market? You think about all these factors. That, to me, is why we're starting to see M&A booming. And it's booming amongst the highest quality or most expensive assets. So you're in that top tier. This isn't a situation. It's not an M&A boom when Moose Pasture Minerals buys ABC Gold for $80 million. It's a nice takeover for some, but those aren't the deals we're talking about right now. These are high quality assets that are being acquired. And just to add on to what I said, it just reminds me of this great movie, Margin Call. I'm sure most of you know it, but this guy, great actor, Jeremy Irons, John Told, what a great name for the character. Making fun of Dick Fold, by the way. I mean, what a name, Dick Fold. I mean, I'm sorry, he maybe should have gone by Richard. But anyway, you have to remember what he said. There's 3 ways to make a living in this business. So be first, be smarter, or cheat. And so going back here, it makes me think, you think about all these factors, like you don't want to be just sitting around, sitting around on your hands or with your dick in your hand if you're one of these companies. Like, you don't want to be reckless, but you're looking at what's happening. There's not that many assets. The market could be going into a real bull market. We got to be first. Like, there's a risk of really waiting around. But as far as be smarter, we know that these mining companies are not that. They're really, no one's ever accused them of being smart. So I had to just get this into this video because I like the movie so much and it was related. And so finally, I want to look at 3 recent gold takeovers. I know the Great Bear one is not so recent, but I think that these have been 3 of the best recently as far as assets and as far as junior gold companies. And so I put in this information into this table so you can pause the video and look at this info if you don't want to hear me yapping for another couple minutes. But Great Bear was acquired by Kinross for $1.4 billion. So these are US dollars. And then I put in the resource here. And then these figures are based on recent economic studies. So you have the CapEx, their production level, what's the AISC and the operating cost, and then how much cash flow could they generate at $2,500, the current gold price. Now, these are my estimates. And then the net present value at $2,500 gold. And so for Osisko Mining, their feasibility study was 2 years old. So I kind of estimated these numbers right here based on, I didn't just look at 25. I think I used 2,300 for Osisko, considering that there's obviously been cost inflation in the last couple of years. But we can look at these numbers and see, of course, this one was kind of an outlier, but Great Bear, so most of this is open pit, I think, but nearly 3 million ounces. I think this is M&I or maybe P&P, measured indicator proven and probable, but still 2.8 grams per ton open pit. That is an incredible grade. And if you look at Kinross put out a study just a couple days ago. This thing's producing, or it could in the first 8 years. That's how much it could produce. That's how much it could cash flow right now. So if we think about where the gold market is right now, and if we go into a real bull market where gold keeps going up in real terms, this by the time this starts producing, that could be $1 billion a year in cash flow. And look at the NPV. So this is what it was bought for. I know the CapEx is pretty high, but this is going to pay back within 2 years. It's going to pay back all of the CapEx and a lot more. So you look at the NPV of what it is now, what it was bought. I mean, that's why top tier assets get these huge premiums. Reunion Gold, this was another one. And these are the numbers that just got put out this week from G Mining, the acquirer. And CapEx is a little high, but if we look at these figures, 350,000 ounces a year for nearly 13 years. And if we look at the AISC and the operating costs and then calculate that's almost $500 million a year. NPV $2.5 billion, $640 million. I think a lot of people, and I agree with them, would say there was something maybe incestuous happening between Reunion Gold and G Mining, because this should have been taken over for a lot more if we look at the cost of the acquisition and the NPV right now. And, I already mentioned Osisko. This is kind of a different situation. It was only 50%, $1.6 million for 50%. But, we can look at the numbers, and I just estimated, what it might cash. Maybe this is $500 million now is more accurate. But you get a sense of how you can get a like $1 billion takeover potentially. You're going to need production well over 300,000 ounces a year. You're going to need an ASIC that's 1,000 or below, and then this kind of an NPV at current prices. Before I go, I do want to give you a tease because I'm working on a company report for the premium update this weekend, and I think this company is going to be the next takeover. I think it has at least 100% upside, probably more than that, and I'm calculating what it might be worth. So if you're not a subscriber, I urge you to consider subscribing to find out which company I'm going to be reporting on, which I think has a really, really good chance to be taken over for at least plus 100% from here, probably more. So if you're not a subscriber, hope you consider it. And what do you guys think? Leave me a comment and let me know what's going to be the next big takeover. What's the next Great Bear? What's the next Osisko Mining? We'd love to hear about that from you. So leave me a comment. Let me know what you think. Thank you for tuning in, and I'll see you guys on Friday for the weekly recap.